In today's video, I will introduce an advanced indicator on TradingView, and then I will teach you a very profitable scalping strategy for 1 minute and 5 minutes time frame. Alright, to add the indicator to our chart, here we click on indicators and we search moving regression prediction bands. This one, which is an editor's picks indicator and written by someone named TPIC. Alright, this is the indicator, and as you can see, it's overlaid on the price chart in the form of a bands. It's a kind of similar to Bollinger Bands, but it's different. It's actually a combination of Bollinger Bands, regression channel, and outlier detection methods. This indicator uses polynomial regression, which is a form of regression analysis that fits a nonlinear relationship between variables, which in this sense, it can better describe the price action because the price never moves in a linear direction. Here in the middle, we have this band, which changes color between green and red, and it's built based on moving regression and moving regression prediction, and we have these upper and lower bands, which by default are placed 2 standard deviation from the middle band. Based on a statistical principle, multiplier 2 for the upper and lower bands corresponds to 95% prediction interval. In other words, we expect that 95% of the data, the price action falls between the bands. For our strategy here in the settings, for the multiplier, we set it on 3. And by doing so, statistically 99.7% of data falls between the bands. Having the price out of the band is very rare, and it can signal us for some happenings in the market. The author of the indicator believes that when the price crosses above the upper band, it's a bullish signal, and it's a sign that the price is gaining momentum and it's actually out of the previously predicted trend. And similarly, when the price crosses below the lower band, it's a bearish signal. When the price closes below the lower band, it shows a red triangle, and when the price closes above the upper band, it shows a green triangle. There are cases when the price crosses above the upper band, we have advancing of the price after that, or when the price closes below the lower band, we have declining of the price after that. But in practice, most of the times when the price reaches or goes beyond the bands, we have reverse of the price and the price goes back inside the band. You can clearly see that most of the time this is the case, and the reason is the statistical principle behind this, because when the price is out of the band, it's a very rare happenings. For example, in this setup, 99% of price movement is inside the band. So when we have the price out of the band, it's a kind of extreme level, overbought or oversold level, and we have more probability to have the price reversing back inside the bands. Alright, now by the help of this fact and this powerful statistical concept behind this indicator, I want to teach you a trading strategy that you can catch these movements of reversing back inside the bands after being out of the band. For our strategy, the multiplier for the bands should be 3, which we have already set it. This trading strategy is a scalping strategy for 1 minute and 5 minutes, and the chart type should be Heikin-Ashi chart, and you can use this strategy in Forex market, crypto, or stocks. The only requirement is high trading volume and liquidity, both in terms of the asset and broker or exchange that you're trading, because this is a scalping strategy and we don't want to experience any unreal price gap or large spread between bid and ask prices that can damage our trade entry, stop loss, and profit. We need to add another indicator, and it's awesome oscillator, this one, which is a built-in indicator on TradingView platform. Everything is already set on the chart, and before we start the strategy, please give this video a like, and if you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. Alright, when we have a signal like this, for us based on our strategy, this is not a bullish signal. We consider it as a bearish signal. We see this as an extreme level of the price, and we expect that the price will reverse back inside the bands. When we get this signal, we go to the awesome oscillator and we wait to get the first red bar. When the red bar formed in awesome oscillator, we check the Heikin-Ashi candle. If it's red, we enter a short position. If it's not red, the signal is rejected. So we can enter a short position here based on this signal with the stop loss placed above the previous swing high and the profit at 1.5 risk to reward ratio. Please pay attention that this is a Heikin-Ashi candle, and the closing price of this candle or opening price of this candle are not the current price of the market. In practice, when the confirmations are done, you enter a trade at the current price of the market, not here. And this opening price doesn't represent the current price of the market. I have a complete guide to Heikin-Ashi charts. The link is also placed in the description, and I highly recommend you to watch it so you better understand the Heikin-Ashi candles moving back on the chart. Here we got this signal where the candle closed below the lower band, and these closing out of the bands continued up to here. And for a bullish setup here in in Awesome Oscillator, we wait to get the first green bar. When the first green bar formed, the Heiken Oshi candle should be green, which in this case it's not. It's a doji, and even the next one is not a green candle. So the signal here is rejected and we don't open any long position at this point. Alright, here you can see that starting from here, we have the price closed above the upper band. So here in Awesome Oscillator, we wait for the formation of first red bar. And when it happened, the Heiken Oshi candle should be red. So everything is confirmed here and we can enter a short position, and you can see how the price declined after that. Another signal we had here, and in Awesome Oscillator, we get the first green bar here and Heiken Oshi candle is green. So another long position opportunity here, and you can see how the price advanced after that. Another signal we had here for opening a short position in Awesome Oscillator, we got the first red bar here at this point. The Heiken Oshi candle is red, so another opportunity of entering a short position, and you can see how the price declined after that. Here we have another signal for opening a long position. In Awesome Oscillator, we got the first green bar here and the Heiken Oshi candle is green. So opening a long position is confirmed here, and you can see it was a successful trade, and we continue like this. Please pay attention that although this strategy is very accurate, but it doesn't mean that you will not have false signals. There is no trading strategy with zero false signals, and losing trades are always part of the game, and you need to manage your risk properly so you can protect your trading account. There is a risk management strategy which is called 1% rule, and it's one of the best risk management strategies for scalping and day trading. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.